Okay, thank you.
Great.
So, yeah, today what we're gonna be talking about we're gonna talking about spread, and we're gonna talking about the types of currency pairs. We're gonna talk about spread. What is we talk about
Yeah.
spread?
Okay.
Okay, we're also gonna talk about types of currency pairs.
Yes.
Types of currency pairs. Under on that right here, we're gonna talk about what is base currency and what is codes. So
Good.
these are what we're gonna be talking about in today's class. So
Okay.
now let's discuss about first thing. We need to talk about types of currency pairs. Types of currency pairs in the forex market. Actually, there are three types of currency pairs. The first is the major currency pairs. We have the major currency pairs. And the second, after the major currency pairs, we have the minor currency pairs. Some call it crosses. I call it minor currency pairs.
Okay.
And then the third one is the exotic currency pairs. Exotic currency pairs. So the first we're going to be talking about right here is the major currency pairs. What is major currency pairs? Major currency pairs simply means currency which are paired against the American dollar. I'm going to show
Okay.
you an example on our chart right here. Any currency you see in the forex market paired against the American dollar is called their major currency pairs. They are called major currency pairs because they are very popular among traders in the forex market. They are one of the most currency which traders do trade. They are one of the leading best economy in the world. Like we do have right here. We have right here there. We have right here their euro against the USD is one of the most traded currency pairs in the forex market. That is the euro currency pair. And the second, we have the British pound sterling against the USD. We have the Australian dollar against the USD. We have the euro, British pound
Yeah.
sterling, the Australian dollar, the New Zealand, the Japanese yen, the Canada paired against the uh, American dollars. So,
I have a question, Alan.
you said?
I have a question.
Okay.
The currency euro against the pounds, is it a major currency pair?
Yeah, it's a major currency pairs.
The
You
euro against the pound.
right in the in the major currency pairs. These are currency paired against the American dollar. American dollar.
Always
Amer
against the major powers.
yes,
Okay.
against American dollar. We have the euro against the American dollar. We have the British pound sterling. We have the Australian. We have the New Zealand. We have the USD Canadian. We have the USD yen, and then we have the USD switch.
Okay.
You can see this
I get
currency
it.
here. There is 1, 2, 3, 4, 5, 6, 7.
Yeah.
Can see that?
Yes.
So those are the major currency pairs in the forex market. So any currency pairs which is not paired against the American dollar right here, if it is paired against other currency pairs, we have the second. I'm gonna give you the okay. Hang on. I'm gonna give you explanation so you can the major they are
Okay. This
paired
is
paired against the US USD. So these are the number one characteristics, or if you want to figure out, maybe a currency, its major currency pairs, it must be paired against the American dollar. And why are they being paired against the American dollar? Do you know the reason? Huh? Do you know the reason why they are being
well, it
paired?
is the more stable currency,
You say it is more stable and
and also big volume.
okay. Well, that is welcome. That is welcome. That is welcome.
And
But
well, it is a reference for commerce, I guess. I don't know.
well, the major currency whereby they are called, the major currency pair. The main reason is because American dollar is the world reserve currency. The
Okay.
USD is the world reserve currency. That is the major reason, that is the reason any currency paired against the American dollar is referred to as major currency pairs. Actually, we have the 8 leading economies or economical country in the world. The first country, we have the euro, we have the euro currency, we have the pound sterling, we have the Australian dollar, we have the New Zealand dollar, we have the United States dollar, we have the Canadian dollar, we have the Switch, and then we have the Japanese. All these currency pairs, all these currency, they are 8. I'm gonna write it down right here. We have the euro, we have the pounds, GBP, the pounds, we have the
Yes.
Australian dollar, we have the New Zealand, we have the USD, we have the Canadian dollar, we have the Swiss franc, and we have the JPY, that's the Japanese yen. So 1, 2, 3, 4, 5, 6, 7, 8. All these currency right now, they are the major currencies. That is the country with the highest ranking economies in the world. So whenever this currency right here, all this currency right here, whenever they are paired against the USD dollar, whenever they are paired against the USD dollar, let's say, for example, we have the USD right now against the
Yeah.
euro, it's regarded as major. Maybe you have the GPP against the USD, it's regarded as major. Maybe the Australian dollar or the New Zealand or the Canadian dollar or the Swiss or the Japanese yen, they are regarded as major currency pairs. Okay?
Okay. Yes.
So these are the major currency pairs. So under this section, there are the 8 leading economical or high economic country with the high best favorable economics in the world. That is the leading countries in the world. So if you are talking about the Europe, maybe the Euro, the Britain, the Australian, the New Zealand, the American, the Canadian, the Swiss, and the Japanese. So these are the countries of the best economics in the world. So whenever they are paired against the American dollar, they are regarded as the major currency pairs in the forex market. And
Okay.
we have
Yes.
we
Yes.
have the second class, which is the minor currency pairs. The minor currency pairs simply means whenever any of these currency pairs right here, they are paired against each other, not the USD.
Ah. Okay.
Let's say for example right here, Let's say we have euro paired against the British pound sterling, the GBP against the AUD, the euro against the JPY.
Okay, clear. Yes.
Yeah, the maybe the GBP against the New Zealand, or maybe the euro against the Canadian dollar. Whenever any of these currency pairs right here, they are paired against any of each other right here, they are regarded as the crosses. You can call them cross currency pairs or minor currency pairs.
Okay.
So this is it. So the exotic currency pairs, these are countries, these are developing countries, countries which are still under development, which economies are not so buoyant like the listed currency right here. They are developing countries which economy is not as stronger like all this currency right here. We, we have the like the let's say for example we have the currency, maybe the Russian currency. We have the maybe Brazil, maybe the Mexico, maybe the Indian, maybe the South Africa, maybe the
The China as well.
The China as well. No, we can put them under the exotic currency pairs because it's not on the major currency pairs and then not on the minor currency pairs.
Okay.
We have some other currency pairs that appeared against the American dollar, but which are not minor currency pairs. For example, right now you can cross, let's say, the Sweden no currency pairs against the American dollar. You can pair maybe the Mexico currency against the American dollar. That doesn't make it a minor or currency pairs.
Okay.
So any currency you cannot find right here on this list right here, on these 7 currency price here, whenever you find them paired against any of these currency right here, they are exotic currency pairs.
Okay.
Exotic currency or pairs. So,
Clear.
so good. So we're gonna be talking about their abbreviation. Abbreviation. So I'm gonna clean this off. For example, now the United States currency abbreviation is the USD. The
Yeah.
euro.
US and the third letter is the currency. Yeah. Yeah. This you told me already.
You said?
Yeah. It's clear. Yeah.
Okay. The euro. We have the abbreviation representation as this. Euro. The pound sterling. That is the Great Britain. The pound sterling. We have this as GBP. So these are the abbreviations you're going to come across in the forex market, like the Japanese yen, Japanese yen. We have it as the JPY. The Canadian dollar. We have it as the CAD.
Yeah.
Okay, and then we have the Swiss franc, the Swiss francs.
Yeah.
We have it as the CHF.
Okay.
Okay, we have the New Zealand as the NZD. We have the AUD, that is Australia as the AUD. So these are the 8 major no economies in the world. This is the first, second, third, fourth, fifth, sixth, seventh, eighth. So we have the US dollar with this symbol, the currency. We have the euro. We have the yen. We have the British pound sterling. We have the yen. We have the Canada. And then we have the switch. It's the same thing like this. We have the New Zealand. And then we have the Australian dollar, that's Australian dollar AUD. So these are the, hello, are you right there?
Yes.
So these are the 8 major currency pairs in the world. When you pair them against each other, they are 7. And then when you pair them against each other without uh, implementation or without having the USD currency pair right there, it's regarded as the minor currency pairs. So now examples of the exotic currency pairs, we have the Russian ruble, that is the Russia. We have the Russian ruble. Actually, you don't need any of these currency pairs right here. You don't actually need them unless you want to trade the exotic currency pairs. And the exotic currency pairs, they have higher spread, higher
Okay.
spread, and then not much being traded by most traders in the world. So if you trade this currency pair, it's gonna take a lot of time, very difficult for you to make a quick profit on time. So
Okay.
that is a major reason people don't participate in it because they're not being traded by most traders in the world. So they don't have much volume, and volume is what moves the market. Without liquidity, there is no money in the market. So
Okay.
now let's discuss about, let's show them this currency pairs right here. We have the euro, British pound sterling, the AUD, the euro against the British pound sterling, the euro against the Japanese yen, the pound sterling against the Japanese yen, New Zealand against the USD against the Canadian. We have all this currency around right here. And you're going to see right here, we have examples of this currency right here. For example, the currency I have right here now is the USD dollar against the Norwegian krone. These are exotic currency pairs. And this one right here is the USD against the Danish krone. So it's exotic currency pairs. And this one right there is the USD against the Hong Kong dollar. These are exotic currency pairs. So if we calculate, I'm going to show you the spread right here. So you're going to see what I'm talking about. I'm going to show you right here. Okay. So it's time now we show you what is spread. Let's say, for example, okay, first let's discuss about base and then quotes. What is base? What is quote? That is what we need to discuss before we start moving to what is the spread. Right here, let's say, for example, we have the euro against the USD. This is the base currency.
Okay.
This is the base currency. While the second currency is the quote.
Okay.
So the first currency at your left hand side is the base. While the second currency at your right hand side is the quote. So in the forex market, currencies are being traded in pairs. So whenever you are buying a certain currency indirectly, you are selling the other currency. In order to make money in the forex market, you have to sell one currency for the exchange of another currency. Okay, that means, let's say for example, you live in Germany or you live in Germany, right?
Germany.
Yeah, okay. You want to try, you spend euro in Germany, right?
Yes.
Let's say you want to go, you want to move on a vacation. Let's say for example, you are planning for a vacation that is right there in Germany. You want to travel to USA. Okay,
Yes.
this is the currency in US. Why this is the currency in Germany? So when you are traveling to USA, you have to exchange your euro for the what? That is the US dollar.
Yes.
So whenever you do this, you have just sold your euro to buy the dollar. So you have done forex.
Okay.
You
The
have
forex
done
currency exchange. Yeah.
so you exchange your euro in order to get the American dollar. So whenever you do this, there must be a certain exchange rate whereby when you exchange your euro, there's a certain amount of money you will get for your US dollar, and that is the exchange rate. The
Yeah.
exchange rate. So once you have known the base now and the quote currency, now let's move on. So base and quote currency. The first currency pair is called the base, while the other second currency is called the quote currency. The price of the base currency is also always calculated in units of the quote currency. So let's say, for example, right here,
Yeah.
I'm going to show you this. Let's say, I'm going to open the USD. Sorry, I need to open the USD. Okay. Okay, this is the USD. I need to Euro USD. I need to remove all this off, everything off, off, off. I want to remove everything right here. Actually, I say I don't know. Maybe I save this currency or template. Okay. Okay. You still remember how to save your template?
Yes.
Okay, good. So let's say, for example, maybe right now you are planning to travel to United States. You have your euro right with you. This is the current exchange rate for euro to dollar right now. That is 1.09827 euro to USD dollar. Rate at the moment is 1.09822. That is the exchange rate at the moment. That is the exchange rate. You understand that?
Yes.
So right here, we have the bidding price and the asking price.
Yes.
This is the bidding price. This is the asking price. Bidding price, asking price.
No.
So whenever you subtract your bidding price from your asking price, What do you think you're gonna get?
Well, you get
You get a difference between the bidding and the asking price. So what is it? What is it called?
a negative number. Hey, who
We
is
get we get we get
buyer?
we get what is called spread.
Ah, yeah, this is it. Okay.
So when you get the difference, if I minus, let's say for example, we minus this right now from
Mhm.
this figure right here.
Yeah,
Let's minus it. That is 1.097. Take note the numbers is usually changing, it's fluctuating, it's not stable,
yeah.
it's not stable, always fluctuating, so it's not stable. So if I subtract this, let's say 48
Yeah.
minus 1.097. No, it's it is changing, but let's make use of, let's say for example, right now we have 1326. So let's make use of 1326.
Mhm.
1326. I'm gonna clean this off. 26, 13. We have 1.0972. We have 1.097. If we minus this, that is right here, 3. We have right here, 1. So the difference between the bidding price and the asking price is the spread. Do you
Yes.
understand that, or should I come again?
No, no, is that clear?
Okay. So the difference between the bidding price and the asking price is the spread. So
Mhm.
now, what do we understand by spread?
What we understand, I understand that if I have a greater volume, I expect that the spread is much lower than for uh, currency with the low volume.
Spread are based on the buy and sell price of a currency pair.
Yeah.
That's the difference between the bidding price and the asking price. That's what just the spread is all about. So we don't need to confuse ourselves with different, grammars and explanation. Just know the spread is the difference between your bidding price and their action or price. So that is the spread. So how can we make use of spread right here in the Forex market? How can we make use of spread?
How can we make? Sorry.
How can we make use of spread in the Forex market? This is what I'm going to be talking about next right now. So let's say, for
Okay.
example, you want to execute a trade in the Forex market. Remember, we have major currency pair,
Mhm.
we have minor, sorry, we have what? Do you remember the last one?
Yeah, the exotic.
What is the last one?
Exotic.
Exotic. Good. So most of the spread on the major currency pairs, it all depends on your brokerage firm. And that is why it's advisable if you want to start trading, you choose a reliable, trustworthy, and honest brokerage firm.
Okay.
Most uh, currency pairs on the major currency pairs, they are always very small. They are smaller than the minor currency pairs and the exotic currency pairs. Most of the major currency pairs on the brokerage firm I trade right here, the spread right here is not actually more than 3.
Mhm.
Y minor sometimes can be 5, maybe 4, 6. It all depends on the activeness of the market. It all depends on when the market is active. If the market is not active, when there is no much, activities in the market, there tends to be higher, spread increasement. So
Mhm.
we're gonna discuss that in one of our class. So the exotic currency pairs right now, they tend to have higher spread. For example, right now the exotic currency pairs here, it's possible you have something like let's say for example like can have something like let's see for example right here we have 128 right here and then
Yeah.
712 right here. So 712 minus 128. Let's calculate the spread. Right here we have the 4 and then we have the 0 right here. We have 1 right here, that is 8. We have right here, that is 6. So it all depends on the brokerage firm you are using. Remember when I told you about the 5 decimal places. Whenever you have a brokerage firm using 5 decimal places, you neglect the last digits. You only put into consideration the only four decimal places. So right here now, the spread on this currency right here now, no, it's something like 68. You can see the higher spread.
Okay.
You can see it's a
Yeah.
very wide spread right here. So if you execute a trade right here on this currency right now, this is the amount of spread you're going to be charged. If let's say for example, I execute a trade on the Euro USD,
Yeah.
I am being charged maybe $3.
Mhm.
Maybe I execute a trade on the GBP yen,
Mhm.
I'm being charged maybe $7. Okay.
Okay.
Now let's say for example, I execute maybe a USD on the maybe Hong Kong dollar,
Mhm.
and then I'm charged like $70. You can
Really?
see it's very
This can
very
happen. Really.
you see it's very expensive.
Okay.
The spread is too much, so it's gonna cost you a lot of money, and before you make money it's gonna take time. So
Okay.
there's no much
So
liquidity right there.
if you have less money to spend to invest, it's better to stay on the major
Yeah,
pairs.
stay on the major currency pairs. Once you stay on the major currency pairs, you have lower spread, and then you have quick, high probability to make fast money, because most of the investors in the world, they focus most of their attention on major and minor currency pairs. So when you trade these currency pairs, you have liquidity. Liquidity is what moves the market. Without liquidity in the market, there is no money. So try to focus on the major and minor currency pairs because they have much liquidity. They are active. And in a place whereby there is much money, you have high probability of making quick, fast money. Unlike all the exotic currency pairs now, they don't have much liquidity and they have a higher spread. So I trade some traders trade exotic currency pairs, but that doesn't mean you can't actually make money right there. But I focus on the major currency pairs and the minor currency, and which most investors in the world they focus their attention on. So my advice is you stay on the major and the minor currency
Okay.
pairs. Okay,
Yes.
so that is it. So what we're going to be talking about next is execution of your trade. How can you know the spread you will be charged uh,
Mhm.
whenever you want to execute a trade?
Okay.
Actually, we have, I'm gonna try to show you, give you a settings right here. I think I can make a settings right there to show us I wanna make a price right here. I think If you have the MetaTrader, do you have the application on your on your
Yes,
on your personal mobile phone?
not yet. But I have now MetaTrader 4 from the broker Hot Forex, as you have.
Okay, 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 good. There's something I want to show you actually on the, what is it called? On the my mobile device. You can actually see the spread. I'm gonna send you a screenshot right now. I'm gonna show
Okay.
you. Hang on, just give me some minutes so I can just make a screenshot on my device so I can show you so you can actually understand the spread,
Okay.
stuff like that on your MT4. Okay, I'm gonna make a screenshot right here. Okay, great. I'm sending it right now on mine. I'm gonna share it with you. So I will need you to get the application on your mobile device so you can as well
Right. Okay.
play run it. So let's know, show you right here. Okay, this is
Hmm.
it. Can you see this right here?
Yes.
So this is
It's directly indicated the spread.
can see directly, you can see the spread right here. Can see can see the spread right here.
Yeah.
Can see the spread. See the spread. Can see this is the base currency. This is the quote. This is the base. This is the quote.
Yeah.
Can see right there. So these are the
Yes.
difference between this bidding price and asking price. There's a difference right here.
Yeah.
Okay. So there is the spread. You can see they have a lower spread right here. We have 18. Actually, the reason why we have 18 right here because we have 5 decimal places. So you're gonna
Yes.
just approximate this 8. You're gonna approximate this 8 to 1. That would be 2.
I get it.
This 3 to 1 is not up to 5, so there should be 1. Why this one right here approximate this 6 to 2? That would be 3.
Okay.
Why this is 2? Why this is 2? Why this is 2? Why this is 2? 2, 2. You can see
Hmm.
they have a
Yes.
lower spread. Can see all
Okay.
these major currency pairs, they have a low, no, is a 1, 2, 3, 4, 5, 6, 7. They have a low, no spread. Okay.
Yes.
So I want you to view this image properly before we move to the next. If there's anything you
I
don't
have a question,
understand,
Alan.
okay.
If we have a major pair, euro against the US dollar, where the euro is the base currency and the US dollar is the quote,
Okay.
can I have also another major pair, USD euro? I mean,
Yes.
the inverse,
Yes. Yes. You can have the inverse. They all mean the same thing. You
and the
can
spread is the same or not?
is the same thing. It's the same
It's the
thing.
same thing. Okay,
Yes,
okay,
yes. You can change it anyhow. You can make the euro to be the first currency, while the USD is the quote, that's the second currency, and you
okay,
can make the USD to be the first currency. For example, right now, let's say, for example, right here now. For example, right now, you can have the euro against the USD. You can also have maybe the USD against the euro. They mean the same thing.
okay.
It means you can exchange euro for the USD. You can as well exchange USD for the euro. Right here, you can exchange USD for the euro. You can also exchange euro for the USD. So they all mean the same thing. Okay,
Perfect.
good. So 8 major currencies.
Yeah.
Take note of that.
Yes.
And the what? Next, 7 major currency pairs. Currencies pairs. Okay?
Yes.
So I want you to give me list the 8 major currencies in the Forex
Yeah.
market.
Euro, New
Okay?
Zealand dollars,
Hang on, I'm gonna write it down. Euro, okay?
uh, Great Britain pounds,
Okay,
New Zealand dollars,
okay,
USD,
okay,
Canadian dollars,
okay,
Australian dollars,
okay,
Swiss francs,
okay,
and one, two, three, yen, Japan yen.
okay. 1, 2, 3, 4, 5, 6, 7. This is
There is
7.
one missing.
Yes.
1, 2, 3, 4, 5, 6, 7, 8. New Zealand, allora, Euro, GBP, Australian dollars, we put it, yeah. USD, New Zealand, yes. Canadian dollars, we put it.
I
Swiss
want to
franc.
test you. It's actually 1, 2,
There
3,
are eight. There are
4, 5, 6, 7, 8. You are right.
eight. Okay.
That is good. So list the 7 major currency pairs. Hang on. I wanna raise this.
Now this is clear now.
Yeah, so I want you to list the 7 major currency pairs.
Okay, Euro against the USD.
Okay.
U uh, Great Britain pounds against USD.
Okay.
Australian dollars against USD.
Okay.
New Zealand dollars against USD.
Okay.
Canadian dollars against USD.
Okay.
Swiss franc against USD.
Okay.
And Japan yen against USD.
Okay. 1, 2, 3, 4, 5, 6, 7. Okay. Great work. So great job. So I'm very glad you understood this class. Very good. Very good. So now let's move on to trade no execution.
Yes.
It's a demo account right there.
Yeah.
Let's say, for example, you want to execute a trade right here. Let's say, for example, on the Euro USD. Remember, you right click on your mouse or you press the F9 button right here. And then you have the currency pairs right here. This is the base and the code.
Yes. Yeah.
So you're gonna see
Spread. Yeah.
yeah, this is the bidding price, this is the action price.
Okay.
The bidding price is the amount people want to purchase, and this is the amount maybe the brokerage, the money makers, the financial markets, want to sell out.
Okay.
So once you execute an order, your order will be calculated based on the difference between these two pairs figures right here.
Okay.
So now comes in the small little calculations. So let's say, for example, right here, if you are taking 1.01 right here, that will be multiplied by the spread right here.
Yeah.
So same goes to the position size you take. Maybe you take 0.11 lot or 5 or lot, things like that.
Yeah.
So that is based on the spread, the base and the quotes and the 7 currency pairs, the 8 major currency or pairs. So
can we do really a practical case with the money just to understand
yes,
how
I'm
much
gonna
is
yes, I'm gonna
this
I'm gonna yes, I'm gonna practicalize right here. So I'm gonna trade. Okay. It's a trade right here. Okay. Let's say, for example, we want to take a trade right here. I want to take a trade of 0.01 right on this currency pair right now. The spread right here, I think is around 15. The spread right here is around 15. So let's take a trade. Let's take the trade on the Euro USD. New order. Let's take 0.01 because right here we have $22.01 on this account. So let's take 0.01 and let's maybe we buy right here. You can see minus 0. When we got in right here, it was minus 0.20.
Okay.
Do you get the calculation? That is 0.01 times 2 the spread.
Yeah.
Do you get that?
Yes.
So that is how every trade you execute on the trading chart. Whenever you get in, the amount that's gonna be deducted from your account is the position size you take multiplied by the spread.
So this is the cost of the trade.
Yes, thank you. That is the cost of each trade you take. That is the cost of each trade you take. Okay?
It is proportional. It is proportional to the volume that I use.
Yeah, it's proportional to the volume you take. I'm going to explain it again so we can understand it properly. Right here now, the spread right here is 80. Now let's say the spread right now, it's always changing. It's always changing. It's 80 now, 94, 80, 94. That is 80, 94. So
14.
That is 14. So let's try and take a trade right now. Let's try and take a trade right now.
Yeah.
Remember, the spread is always changing. Now it's 88, 803. Yeah. Let's buy right here. You can see now we have minus 0.16. Yeah. Price has moved up. Price is moving in our direction. That is why you can see right now the first trade right now we are in profit of 0.11. You can see right here now the first trade right now is in profit because the trend is moving in our direction. You can see right now we're in profit. We're in profit right here. Right here we're still in loss, minus 0.7.
That is percentual, or it is in percentage, that number, or it is really the dollars of your balance?
You mean this trade right here?
Yeah, okay, that is your balance. On the right, this is really the profit in dollars.
Yes,
dollars,
yes. This is the profit in dollars.
Okay, so you spent something like 20 cents at the beginning.
No,
yes. Even less.
Yes, 20 cents. Yes, 20 cents right here. The spread right here is 19. So that is a 19 times 0.01. That will be 0.19. That will be 19 cents. Okay?
Yeah.
So that is 19 cents. So let's say, for example, we take one standard lot.
Yes.
That will be 1 times 19. So the cost of the trade will be $19.
I get it.
$19. Okay?
Yes.
So if you take maybe 5 lots, that will be 5. Maybe the spread is 20. That will be 5 times 20. That will be cost is $100. So if you take 10 lots, that will be 10 times 20. That will be $200. For 10,000 for 10,000 worth of US of trade, $10,000 of trade, you are being charged of $200. But it depends on your brokerage firm. So brokerage firm is charged higher spread.
Okay, but the spread change from broker to broker.
Yeah, the spread change from broker to broker, but some brokerage firm, they are fraudulent in nature. They charge higher spread than the normal rate which should be charged.
And you trade on Hot Forex?
Yes, I trade on Hot Forex and I trade on Blueberry Market.
Okay.
So I've studied them for years and I see their spread, everything is okay. So
Okay.
that is why I recommend for you trade on hot forest. It's nice.
Good.
So that is everything on the spread base code currency, 7 major currency pairs, and the 8 major currencies in the world, the minor currency pairs. So let's experiment with the minor currency pairs. We haven't done that.
Yes.
So let's check like this Australian USD. Let's try and
Okay.
take a trade on Australian USD new order. Let's buy. You
Yeah.
can see right here. What is the
Yes.
spread? What is the spread right here?
It is a 41. Yeah.
Okay, good. Now, if we take a trade right now, you can see we are being charged like 0.72.
Okay.
No, 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 right here. We have no, sorry, I didn't monitor it. Let's make another trade. I want to see the different right here. New order. I want you to monitor it. That is new order right here. So let's
Okay.
buy right here. Okay, we have been charged no 30.
Okay. 30. Yeah. I get it.
30. Even though it's
That's
a
interesting.
even though it's a minor currency pairs, you can see the spread is not much high, just 30.
Okay.
If we compare this to other brokerage firm, they can charge you like 70 or 60.
Okay.
So let's practicalize other minor currency pairs. Let's see the GBP against the New Zealand. It's a currency pair that have a high spread. Let's see. Let's take a new order. Maybe let's buy. Okay, you can see we have been charged 52 cents.
Yeah.
That is the
Okay.
spread right there is 52.
I get it.
52. So let's try an exotic currency pair right here. Let's try the USD dollar against the Chinese. Let's see. Chinese new order. Let's buy.
Okay. 51. Okay.
Okay, that is, we have been charged from the beginning. I think that was 0.6. That is $60.
Uh-huh.
Compared to that,
60 cents. 60
60
cents,
cents.
right?
Yes. Compared to that dollars, they can charge you like a spread of 120.
Yeah.
So let's take an example of USD against the Hungarian currency right here. New order. Let's see. Let's buy the Hungarian right here. You can see we have been
Okay.
charged $1.30. That is 130. That is, the spread is 130.
Yeah. 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 I see.
And that is exotic currency pairs. You can see the spread is very high. And let's see the
Yes.
chart. Let's see the chart. Let's see the chart. Let's see
Okay.
the chart. Let's see how the chart is. This is the chart right here. You have the resistance right here. You have a potential support level right here. You have a potential resistance right here. So this is the chart of the currency right here. Now you can see the spread we have been charged right here, almost $1.40. That is almost 140 pips difference. Unlike when you trade the major currency pairs, whereby we have been charged just 19 cents, 15 cents, 20 cents, the minor currency pairs 30 cents. While the exotic currency pairs almost $1.30-40. You can see it costs much. No?
Yeah.
And
I see.
it's not being traded by most traders. So the liquidity right here, it's not like the major and the minor currency pairs.
Okay. So usually you trade on USD, Euro, or USD.
I trade major and minor currency pairs. I'm gonna show you a list of
Also,
currency pairs I trade. This is my trading chart. This is the currency pairs I trade. You can see I trade GBP USD, Euro USD, USD
okay.
Canada, USD Yen, USD Swiss, Australian USD, New Zealand USD, Euro GBP, Euro Yen, Euro Swiss, Euro Canada, Euro Australian dollar, Euro New Zealand, Australian against Japanese Yen, Australian Canada, Australian Swiss, Australian New Zealand, Canada
All
Swiss,
minor,
Canada
but
yen.
no, not exotic.
You said?
Not exotic.
No. I don't trade exotic.
Okay.
These are the currency pairs I trade, and I trade gold. I trade Bitcoin, I trade oil, and I trade natural gas.
Ah, cool.
So these are the currency pairs I trade. Trade right here. I think they are all 32 markets, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32. So I monitor 32 markets.
Okay.
So 28 currency pairs under one metal, one cryptocurrency, two energy, oil, and the natural gas. So those
Okay.
are the markets I watch.
Nice.
So
Okay.
let's take example of it. Let's take a trade on gold and see the spread on gold. This is gold paired against the USD. If I take a trade right here now, near order on the gold, let's say I want to buy right here, you can see the spread on the gold. You can see the spread, very high spread, something like 250. So let's try and buy the gold and see what's actually gonna happen. You can see not enough money. I can't buy this. I don't have enough money right here. Remember, the money right here is just $22. So that means I can't trade. I can't trade right here on the gold. I don't have sufficient money right here. So that is it. So if you want to take the gold, if I have like $100 right there, I should be able to take the gold with the lowest position size, like 0.01. It all depends on your spread. It all depends on your brokerage firm, the spread. So
the minimum with the hot forex is 0.01.
It's all brokerage firm, 0.01, all brokerage firm. So it now depends on the spread you're gonna be charged. Okay. But the lowest size you can take on the forex trading market is the 0.01.
I get it.
Yeah.
I get it.
So that is everything we need to know about the base codes, spread, eight major currencies and the 7 major currency pairs. So
this is very clear now, and also the spread now and the cost of a trade. This was important to understand for me, and now it's clear.
Yes, so you need to understand that so you can know how you're gonna plan your trade before you execute. So you know the amount of money you should risk. For example, in a market that costs much higher spread, you should reduce your position size. In a market that requires little spread, you can know how to manage your resources. All right. So for example, right now, if you want to take 0.01, if you want to take like 0.10, let's say for example, you want to take 0.10 on the, let's say, Euro USD, you have a spread of 2. So if you want to take a position of 0.10, so how much do you think you're going to be charged?
€2.
Yeah, for euro, if you want to take, that is 0.10. You're going to be charged $2.
Dollars, always dollars or
it depends.
Euro?
It depends. I told you one of the class I discussed last. I say it depends on the account, on the currency you fund your account in.
Okay.
Maybe you fund your account in. It can be euro, it can be pound, it can be yen, it can be Canadian dollar, it can be Australian. Whatever currency you fund your account in. So let's say euro. Okay, sorry, I'm going to be using euro because you spend euro. So you're going to be charged €2. €2. So right here, if you want to take a trade on the gold, USD, or maybe the gold, no. So you should know, you shouldn't take this type of position size on gold because of the spread right here. So the best
maybe the spread here is 200.
Yeah, the spread right here I think is around 250. Yeah, I think it's around 250. Actually, if we take that trade, if you want to take this trade, we have to have at least $25. Account right here is $22. If you want to take a trade right here based on 0.01, we're going to be charged at least like 25. I think, yes, 25. So we don't have enough choice right here. So that is the reason we can't take this trade. That was a major reason why I can't take this trade, because we don't
It's
have
not
this.
2.5.
Let's see it right here. Let's see the calculation right here. I think we have the good right here. There's the, we have the, you have the Forex calculator on your device.
Yes.
So we can make use of this as well. If you want to trade, you don't need to go through all these trades right here. You just need this, select the euro, and then maybe you want to trade the gold, and then your account balance. Let's say, for example, I have $100 in my account, and then there, I just want to take, okay, let's use, I'm going to, for example, right here, I'm going to send you, let's check the actual price of the gold right now. The actual price of the gold at the moment right now. I think I have the gold right here. Let me check the gold. Okay, this is the gold right now. Okay, this is the chart of the gold. The current price of gold right now is 1,593. So if I want to make a trade right now on 1,593 and I have $100 in my account, I don't want to risk more than 1% of my trading account. So if I calculate this right now, maybe my stop loss right here, don't want to have maybe stop loss of 1,016, 1,614 right here. Let's calculate right there.
Okay.
So right here now, let's see the spread. This is the gold. I think we have the gold. Okay, try new order on the gold. So here's the,
okay.
Here's it right now. So all we need to do right now is to subtract, get the difference right there, then multiply by this right here.
It's 150. Okay.
So
150 multiplied that one is
that is 1594. That is 0.115. Then minus 11595.52. So right here we have, that is one. We're gonna be charged around $1.37 right here.
Yes. Okay, great, understood.
So that is almost 137. That is the spread.
Yeah.
You can see right here, unlike what we want to, if you're taking this right now, this is the amount you're gonna be charged.
Yes. Okay.
1.7.
This is very interesting. Now very clear.
That is the spread. So unlike if you are taking the euro, whereby you just be charged just 19 spread, while on gold you are charged 137 spread. You can see the difference is very clear.
Yeah.
You can see. So that is, we're gonna discuss about this on money management, the position size you take on your account. No, let's say for example right now you don't want to risk more than 5% on your trading account. Maybe you take 3% on euro USD. On gold right now, shouldn't take risk more than 1%. More than 1%. Okay. So that's how you can balance. We're gonna discuss that in one of our class. So that is everything we want to discuss about today. That is the spread, base currency, major currency pairs, and then how to know the minor, the major, the exotic, the spread, their liquidity. So those are the things you need to know. So you need to understand it before you actually get into trading. But most of the times, most traders, they do make mistakes. Imagine a trader who doesn't have more than $100 in his account, executing a trade of 0.10 on gold. Yeah. Imagine. So that is it, because he doesn't understand how they work. So if you have the understanding of the spread, you will be able to implement the right, reasonable risk, management into your trading, strategy and plans. So,
I see.
Thank you so much. Do you have any question?
No, so far no. About the class was really clear and well done. So Just a question in case you know. I have
Yeah.
now Hot Forex and MetaTrader 4 using Hot Forex. I'm using the master account, not the investor one.
Okay.
But I cannot. I don't know why, but when I do new order, is grayed out. No, I cannot do it, and I'm using the demo account,
You
so I
you
don't
you you
understand.
you you cannot do what? You cannot do.
I cannot put an order.
You cannot put an order on the demo account.
Yes. And
Oh,
usually this happens when you have the investor account, right? But in this case, I have the master account, the trader account, but I don't know what is going on. Why?
you can open an account right here. It's very simple to do that. Just need to do is just click on the thing. You can actually get that done.
I,
Maybe
I open an account on Hot Forex, a demo account. I open it.
demo account, and you can initiate a trade.
Exactly. I don't know why, but it's 2 days that I'm trying on internet to
Have you
understand why.
have you funded your account when you opened the account? Did you fund it with a demo? That is a demo. Does a practice money?
Yes, yes. I have $5,000 in the
Did, did,
demo
did,
balance.
did you click on the new order and try to open an account or a trade?
Yes.
And what was the response?
The problem is that it's grayed out, and I cannot choose the currency, for example.
Okay,
It's
it's
grayed.
great. It's
Grayed. I
great.
cannot.
That means I don't think maybe you have logged in yet. You haven't logged in. You haven't logged in. Maybe you try to create another account. Create another. Well, I can. Let me see if I can help you create one an account right here. I can forward you the details. Let's see if we can create an account right here. I think I can create an account right here.
I sent you a screenshot, just maybe. But okay, I don't want to steal more time because now I see that 1 hour is over.
Oh
So I
yeah,
guess maybe that
so I will
we should.
try. Your message me on WhatsApp. I will try to help you create an account. I'll forward you the details so you can log in and start your trading. Okay.
Okay, okay.
Okay.
Maybe
Okay.
next
Okay.
next time I can share the screen and we can do it together. Maybe.
Oh yes, yes. Maybe next time I'm gonna share your screen. Maybe on Team Viewer, I can see your
Yeah,
screen. Okay.
it's
Okay.
fine.
I see it
Okay,
right there. I see the screenshot right there. Don't worry, we talk this later. Okay. I'll send you the
yeah.
copy of this class.
Okay.
Okay. Thank you, and you have a wonderful day.
Thank you very much.
Okay.
Ciao.
Welcome. Okay.
Ciao.
Bye. Okay. Yeah.
Ciao.
Okay.